Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange, being the NZX50. Before I jump across and share my screen, we'll just do that quick bit of housekeeping, and that is that this video is intended for educational purposes only, definitely not intended to be personalised financial advice. For that, you obviously do need to go and have a chat to your own financial advisor. Right, let's take a look. Now, I'm recording this on a Tuesday morning, and the market's been open around sort of 20 odd minutes, and you can see that already for the main board. The market's up about $1.47, so nothing to get super excited about. Let's just zoom in. This little red candle you can see here, that is where we closed on Friday. So yes, unfortunately, we did have a down week. The thing, if I look down the bottom here at the volume, you can see that the volume had come off a little bit even though the market closed down. So that can potentially be a good indicator that the market is just taking a bit of a pause before it goes on again. Let's hope that that's going to happen anyway. That's what it can potentially mean, especially if it's followed by a good green candle this week. But only time will tell. We'll just have to, like I said, wait and see. We are trading sort of up around these near all-time highs really for the New Zealand market or the main board, which is really good. It is driven, however, by only a very small handful of stocks. It's certainly not most of the 50 companies that are on their top stock exchange. It's not being driven by them, unfortunately. There's only a handful, maybe up to a dozen, if that, shares that are causing our market to run strongly. And I know that Fonterra is certainly one of them. It's a share I've got in my portfolio, and it's been an absolute stellar share. Right, let's put our moving averages on. So we'll start off with our 30 exponential. And you can see here that the market's trading above that 30-week exponential moving average. So that's a good sign. We always want to make sure that whether it's the indices or a specific share that we're going into, that it is trading above that 30-week moving average. I'll also pop on the 15-week moving average. Now, the reason I use an exponential rather than just a simple moving average is because it puts more weight to the performance of the more recent trading weeks in this example, rather than just averaging out over the whole 5-year period, which I've got that chart on at the moment. We can see here that the market is trading above both of those moving averages. So that is a really good sign. Let's just have a quick look on the daily. So I'll flick that over to the yearly. Now, this is where things get a little bit concerning, is you can see here that the market has closed below that 15-week moving average last week. And in fact, the previous 7 weeks that the market has been hovering around that 15-week moving average. That is a little bit of a concern, because we want to see the market trading above both of those moving averages. There's nothing wrong with coming back to it. And this could be forming a little bit of a line of resistance before it goes again. I'd like to hope that's the case. Only time will obviously tell us that. But the moment I see our main board trading below these moving averages, whether it's on a daily or a weekly chart, I immediately stop and will not look for any further opportunities, because if this is what the main board is telling me, it could be something that is about to happen throughout the individual stocks. I'm not into guessing. All it does is it's a warning flag for me. The other warning flag that is appearing here is that we've got 2 red candles in a row. So Thursday, Friday last week were both negative days where the market closed lower than what they opened. So that to me is automatically knocked out. Even though I do most of my research on the 5-year chart, when I look at the 1-year chart, which takes me to the daily as opposed to the weekly figures, I will certainly adhere to what that is saying. The volatility on our market is quite low. So if we just take a look at the ATR and divide that by where the market is at the moment. So we're looking at about 1.88% volatility. So that's okay. That's perfectly acceptable. It's just the fact that we had those couple of red candles in a row on the daily chart, and the fact that the market is trading below those is why I would hit pause. Now, I still own shares. There's nothing wrong with that. I'm just making sure that my stop losses are in place to obviously protect me, that if the market should fall and go down, that if those shares are obviously affected by any falls, that I will get stopped out, and it protects my capital, and in a lot of cases it's now protecting any growth that I've got as well. Let's take these moving averages off, and we're just going to do a comparison against the main board being FNZ. So this is a Smartshares, and this particular Smartshare invests in the top 50 companies. However, it limits any exposure to any one company to 5%. Whereas if we were investing according to the index, it would be weighted to the capitalisation of those particular shares on our indices. So in other words, the things like Sparks, which is one of our highest capital index stock, would have more weighting to the iShare than what FNZ is. So why I'm looking at this is just to make sure to see, are we getting a lot of companies participating in this sort of movement on our stock exchange, or is it just a handful? I know that it's just a handful because I regularly look at those particular shares, usually every week, just to see what's happening, and that's why I know that. However, this is a quick and easy way to give you an idea as to whether it is participating throughout the whole indices or whether it is just, like I keep saying, limited to a handful. And you can see here that looking at FNZ being the ticker code, and it's that blue line, you can see that it's performing well below what the main board is doing. So that is a clear indicator that what is performing on our main board is just a handful of shares. And I pointed this out last week. If I go back to earlier in the chart, if we look around here, which was sort of almost 5 years ago, 2020, you can see that blue line is trading above the candlesticks. So that meant there was more participation throughout the whole 50 companies, not all of them obviously, but there would majority would be causing that, which is a good healthy sign. Whereas at the moment, there is that caution out there, and that's why we're seeing that blue line underperforming where the candlesticks are for the NZX50. Now, I really hope that's helped. Now, what I've done is, if you come back on Thursday, I have actually gone and done a review on an index share. It is traded on the New Zealand Stock Exchange, and the reason I have looked at this particular share, it's ESG, so it's environmental, social and governance is what ESG stands for, and it's been a very good, strong performer. Why I've looked at it for the New Zealand market is because it just keeps all the accounting, everything simple and straightforward. Obviously, you can buy this if you're wanting to trade in the US market, that sort of thing. But for me, it's one that's available here in New Zealand. It keeps everything in New Zealand dollars for me. And I'd love for you to come and have a look actually and see what you think. And the reason I've gone and had a look at perhaps some of the index shares that are available is because there's very little opportunity available in our New Zealand market at the moment. So anyway, come back on Thursday. Let me know what you think. And if there's anything you want to learn, let me know. Happy if you reach out to me, and I'm happy to do a video on it and obviously help you in your share trading journey. So until Thursday, take care.